Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish but eventually bearish scenario, as we are looking for a move to the upside in a wave B or 2 before then a continuation to the downside in a wave C or a bigger wave 3. The invalidation of this scenario is price taking the high. Common target for wave B is between the 302 and the 886, and the common target for wave 2 is between the 05 and the 786 Fibonacci. In a wave B or a wave 2, we are then looking for a 3-wave corrective structure, and currently this one over here is very interesting indeed. In this scenario, we are looking for a flat structure where price is going to take this low at least one more time. We are then looking for a wave A, B and C structure to the upside in a 535 to finish wave A. Most common target area for this wave C over here is between the 1 and the 1.236, taken from the low to the high to the low that we have on the chart at the moment, giving us a target area between 42.6k and 43k, which is also on top of this target box here, sitting between 43k and 43.2k, and it also has a nice confluence with this range. As you can see, the range point of control is inside this level and the value area high is just above. Now in this scenario, we want to see this range hold. These are the levels of the previous range that we were in. Currently price is here testing that point of control after hitting the value area low and bouncing. Of course, we like this to hold and then a move towards the upside. So we want to see some proof of support. Whatever that is for you, maybe some local bullish CVD divergences, RSI divergences, market structure change, volume coming in, something that gives us the confidence for a 5-wave impulsive structure to the upside in this wave C. Something else that is nice in confluence with this scenario, as mentioned, is taking the low, but also from a TPO perspective, it's nice to see this low taken. This low over here was made between these two lows, as you can see, low number 1 and low number 2, and the low over here did not wick any of these. It was not the wick and then a move to the upside, or a wick here and then a quick move to the upside. Instead, price continued to range here for a little bit of time before then moving towards the upside. If I open the TPO indicator, what you want to see is a row of single blocks of preferably 2 or more for a high or a low. A great example is the high that we have, where you can see over here 4 blocks at the high, making this a strong high, while the low that we have over here would be labeled a poor low. So that is not something that we really like to see for a bigger trend change, and that is why in this scenario it's so attractive to also take this low, make a solid low over here, right, a strong low, for then a return towards the upside in a bigger wave C, which then is a 5-wave impulsive structure to the upside, where an interesting target for this wave C is this blue box over here, which is sitting between 45.9k and 46.7k. If you go to the second scenario, then we are looking at a zigzag to the upside, but that is only a wave W. A, B, C in a wave W, then an X and a Y. So in this scenario, you are not going to take this low anytime soon, but you're going to have a bigger corrective structure to the upside immediately. Now also here, the target area for wave Y is pretty much the same as the wave C in the previous scenario, which is this box over here, which by far is the most interesting resistance area that we have above price at the moment, which also means price is going to move through the daily gap that we have. The daily gap was a daily candle that moved quickly to the downside over here, and then we retested this gap once, twice, but rejected both times. If price can make it back to this high over here and take the high, probabilities are high to then fill this gap to the upside to at least 45.5k, which is very close to this resistance area, so then we would like to see that one hit. The simplest scenario to the upside would be a simple zigzag A, B, C, where in this wave A we are then looking for a 5-wave impulsive structure followed by a 3-wave B and a 5-wave C to the upside. The problem, however, in this scenario is that your wave 2 is incredibly long. You can see here a 5 fib time taken from the low to the high of wave 1, and preferably a wave 2 is ending before the 5 fib time and not so far after the 5 fib time, really lowering the probabilities of this scenario. increasing the probabilities that if we get a move to the upside to take this high, it's a wave C compared to a wave 3, which therefore increases the probabilities of the flat scenario, as explained earlier, or this WXY double zigzag scenario to the upside. If we then look at a few bearish scenarios, then the first bearish scenario here is a wave A, B, and C to the downside in a 5-3-5 zigzag. The problem in this scenario is that wave 4 retraced to the 0.618 golden pocket over here, taken from the high to the low, which is not allowed for a wave 4, invalidating this particular scenario. The second scenario is also an ABC, but in this case we have a wave 1, 2, and we're looking for a wave 3 to the downside. The only problem in this scenario is that from the high of wave 2 here, this structure to the downside looks very much like a 3-wave move and not a 5-wave impulsive structure to the downside, which is something you really want to see if you're going to be looking for a bigger wave 3 to the downside. Another thing is that we also can't have a WXY here in a W, X, and then a Y in potentially a triangle, because a wave C is higher than this high over here, and then a wave A, B, C, D, E, C above wave A, which is not allowed in a triangle structure. The third bearish scenario here is that we are looking for a WXY, zigzag in W, X, zigzag in wave Y, but we encounter the same problem here, that this very much is a 3-wave structure and not an impulsive structure. So that pretty much leaves this bearish scenario for me. In this scenario, we are looking for a flat structure, 3-wave structure to the upside in a wave A, looking for a corrective structure to the downside in a wave B to grab this low again, create a strong low, and then we're moving to the upside in a wave C. In this scenario, this move to the upside here has to be a 3-wave corrective structure. Now, when we think about an impulse, we have to think about a 1, 2, 3, 4, 5, right? 1, 2, 3, 4, and then eventually the last leg towards the upside. But you can see that this looks a little bit 3-wavy. Arguably, there's a little 1, 2, 3, 4, 5 going on here. However, there is definitely the potential for this move to the upside to be a 3-wave structure. So at least it is something that we have to think about, where the common target for wave B is between a 1.236 and a 1.38, which is between 39.8k and 39k, which is right on top of this target box as well, between 38.6k and 39k. So this could very much be an interesting area for the low of this B and then an impulsive C to the upside. If we look at the CVD divergences, then we have big bearish CVD divergences here at the high, but these have now played out. Lower high on price, higher high on the CVD. This low was the target. That one has been taken. We do have some bullish CVD divergences here, but we prefer to see some local bullish CVD divergences. So a bit of a bounce, retracement, and bullish CVD here without bearish CVDs preferably, else we're just going to be looking for this low over here. So if we then look at the probabilities of the different scenarios, then locally over here in this range, the probabilities would suggest from an Elliott Wave point of view to take the high first before the low. And if we take the high first, we're looking for an ABC compared to a 1, 2, 3, 4, 5, just because of the size of this range. The reason the probabilities for an ABC are higher than for a wave A, B, and a wave C to the upside here is because of this structure again over here. If we are looking for that bearish scenario, wave B has to be a 3-wave structure, and then most commonly a zigzag 5-3-5, but this is not a 5-wave structure by the looks of it. So then we have to think about a double zigzag in a WX and then a wave Y, but that would mean you have a very long wave Y compared to a very short wave W. So that does lower the probabilities for this scenario, but it's good to keep it in mind. If price then moves to the upside, we have to observe the reaction at the target box over here, and of course the levels of the bigger range right above price, because at the moment a flat structure would have some higher probabilities compared to a double zigzag structure, which is a less common pattern. So we have to observe what price does if it does move towards the upside, and eventually looking for the low to be taken to then create sooner or later a bit of a stronger low compared to the weak low that we have over here, also grabbing the liquidity of the final low that we actually missed. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.